Hi, welcome to the Real Estate Market Watch and Mortgage Market Update. I'm Bob Gibbs.
And I'm Michael Caires.
We're in March 2022. Quarter is almost over.
Spring training delayed, season delayed.
More of the same with our sports teams. So we wanted to kind of give you an up-to-date look at what's going on in the market with all the stuff that's going on in the world right now. We're still seeing a very strong seller's market in the East Bay, and with things going way over asking, multiple offers, and just very, very little inventory.
That's almost comical. I mean, in a sense, so it's not comical for those who are able to take advantage of it.
Right.
But it's silly, like monopoly money being thrown around.
Yeah, it's kind of it's really tough on people looking to buy right now. However, we've been able to help some people get into homes, and not all of them are all cash.
Yeah.
So it's something that you have to just, like I use a sports analogy. You keep getting up to the plate and swinging, and eventually you're going to get a hit.
Absolutely.
And so that's the way we're approaching it from a buyer's perspective. I do think the second half of the year we'll start seeing things flatten out a little bit, but for right now it's still a very strong seller's market in the East Bay.
Well, you just went through today, the broker's tour. I mean, you're talking about $2.5 million house, and it was like a rally of
Carnival.
some sort. Yeah, exactly. There was so many people in and out for 3 straight hours. It's unbelievable.
Asking what the magic number is.
Yeah. How wild is that? If you're a seller, that's music to your ears.
Yeah, I think if you're a seller, you should really strongly consider getting off the duff and getting a home on the market. What about mortgage rates? What do you see these days?
Well, I mean, mortgage rates were on a steady uptick for the past 90 days, and then Ukrain. Right. Russia, unfortunately.
Yeah.
And what's happened is typically anytime there's a wartime situation, which is devastating and nothing anybody wants to see, treasuries are the benefactor. They're a safe haven, and investors, hedge funds, you name it, the world jumps into the treasury market, specifically U.S. treasuries. Mm-hmm. And that drives interest rates down. So where we were headed north of 4% on mortgage rates, now all of a sudden we're settling in that 3.625, 3.75% range, which it's just happened in the last week. And I mean, we're talking about a complete reversal. Yeah. Again, I think, and God willing, we see a resolution immediately. Right. And once that happens, when there's any sign of just a peace treaty of any kind, we're going to see rates jump right back up again. Right. I mean, this is kind of a very
unique situation.
Unique, and it's temporary, very temporary.
Hopefully.
Yeah, and again, I don't think this is going to affect in the Fed. The Fed is going to raise interest rates this month, actually, March. Maybe some were leaning to a 0.5% increase. Maybe now, because of what's happening, maybe it's only 0.25%. But I think that by the end of the year, we'll collectively see a 0.5 to 0.75% increase in the prime rate. Yeah. And that means anybody's equity line, it's going to increase by that same amount. Mortgage rates really aren't going to increase by that amount, but maybe half of that. So, I mean, if you're looking to buy, this is the time. I mean, 3% are going to be unicorn interest rates here very quickly. So
Right. Well, so that's what we wanted to bring you up to date. There's a lot going on, so I would encourage you to check back often with us, because we're going to be doing more of these more frequently, just because of the nature of the world right now and what we're seeing.
Things are changing fast.
They are changing. So thanks for watching. Bye.